Hello, my YouTube friends. I hope you're all doing well, and welcome to Milan. Sorry for the delay. I've had a bit of a rough couple of days. Today we're going to talk about valuations and that eventually they make sense. I'll mention a few stocks, might even talk about some real estate, and then I'll talk about the travels a bit. So stick around. I hope it's an excellent video. Good morning. Today is Saturday, June 22nd. I hope you're all doing well. I found a little quiet street where there's less people, so I feel a little bit more comfortable talking. Hopefully you guys hear me okay. I'll probably double check the audio. I might repeat it. Today is June 22nd. I hope everybody's doing well and enjoying their summer and, hanging out with some family as well and making memories, so to speak, as my buddy Lance has said. So, crazy statistic I heard right now, which hopefully it's accurate because I'm quoting it from a YouTube channel. But Nvidia, Apple, and Microsoft are over 20% of the S&P 500. How crazy is that? 3 companies and over $10 trillion in valuation. So they've gotten rather large. What's tough for me is I don't see them really as overvalued because they're continuing to produce, continuing to grow their earnings, and at a really reasonable pace to justify the valuations. Maybe they're a little overstretched, but I find that companies like that tend to be overstretched for years. At the same time, when I look at a company like Target, to me, eventually, it's going to make more sense in terms of its valuation. If it's trading, that's been driving past my Airbnb like every 5 minutes. Drives me totally nuts. Anyway, if you look at Target, to me with Target, anytime you see a price to earnings ratio of 20 or below, I see that as a really good value for that company. They have great earnings and they're growing at a reasonable pace to justify a 20 PE. And last I looked, it was under 17 currently, which I think creates a great opportunity to own a good company at a fair valuation, which is my overall goal. Now, I do stay heavily invested in the Magnificent Seven. Now, this is not financial advice. Please don't listen to me for making your financial decisions. This is just what I do for me. I am not a financial planner. I'm just a guy on YouTube who shares my opinions and my thoughts of what I do. So really, you should seek out a financial planner or somebody, or do your own research in terms of making those decisions for your investments. It floors me that Target actually got down to $102.93, I think it was when I looked. I might be off a little bit, but I kind of looked yesterday to see what the low of the year was. When I think of the price to earnings ratios and how much income they have coming in, forget the dividend that they pay. Like, I love dividends, but really that has nothing to do with the valuation of a company. It's more that it's nice to get those checks coming in from time to time. But when they're growing at the pace they're growing and earning what they're earning, I see more room for them to continue to grow. And I think that drop down into the low 100 range was just an anomaly and obviously short-lived. I think the area where it's trading now is actually very reasonable and creates a great opportunity as well, which is why I talked about it in another video. Now, I've managed to pick up a decent position. I'll probably continue to add on even at these levels, especially if it consolidates down here. And similar with Boeing, it's dropped back into that area that I've talked about where it seems to find buyers. It's back around $175 a share, which I've noticed anything between 172 to maybe 176 seems to be where it finds buyers. It fell back down there again. I think it creates another opportunity for a potential trade. Now, Boeing is not a company that I really want to own long term, but it is a company that I don't mind owning when there's so much bad news coming out and so much bad press. Same with Target. When it got into those low 100 range, it was because the news was so volatile. They were talking about store closures and their quote-unquote wokeness and everything else. Well, now that it tends not to be in the news for that stuff is when it's drifted higher. I think when Boeing gets past the news stories and people start to forget about it, maybe we see the same type of thing. Now, me personally, I've actually been selling covered calls against the Boeing stock. Every time it begins to rally, it's working out quite well. And then I have a base position that I'm holding as well, separate from the one I've been selling calls against. The reality is, in time, no matter what it is, things tend to make financial sense and have right valuations. We are going through an inflationary period. I think it could slow down, but it also may not. I have a concern that when the Fed actually starts cutting rates, you'll see things like housing start to go higher again in terms of their prices, simply because people are going to get overexcited, and the inflation is a real thing. It's not something that's just going to disappear. You add to that the spending that the governments are doing, on top of the fact that Saudi Arabia is now decoupling from the US dollar. These are things that can continue to cause the inflation to go. Now, the Saudi Arabia thing, my understanding, what somebody said in one of the comments, and I'll take him for his word, is that it's not a signed deal, and it's potentially just the Saudis trying to use it for negotiation tactics, which maybe, but I also think it's possible that it makes more sense to them to accept other things than just the dollar. I mean, if you're selling a product, why would you limit yourself to one thing that you'd accept to sell and not be willing to accept other things that you see of value? Now, if it goes through, and assuming it does, it'll be a process that takes time to make the inflation go through and continue for a long time. Because if you're sitting on trillions of dollars, whether that's in treasuries or actual cash or however you have it, and you're a big country, you're not going to just want to dump that currency and cause it to become worth less than what it is currently. So you'll slowly let it go, which is what causes the slow continuation of the inflation. It could take years, if not many years, for that to flow through the economy. Now, if inflation is going higher, that would mean the costs of buying things, including houses and whatever else, will cost more dollars, which is why I really do think when the Fed starts to cut rates, even though it's just more of a mental difference, because it's not really going to impact mortgages all that much. I mean, really, to be fair, if the Fed cuts rates 25 basis points, even if they do that 3 times, which seems the most optimistic right now of cuts, how much is that really going to affect a mortgage? Even if the rates come down the full 75 basis points, that's not a huge deal. But I think mentally people are going to get really excited about the lower rates. They're going to start jumping into the market. It's going to push the prices higher because there is not a lot of inventory. You know, they talk about the golden handcuffs, and I'll tell you what it is because I'm kind of one of those people in that position. I was fortunate enough to refinance when rates got down to about 3%. I actually have a rate a little bit below 3% on the house, and I'm stuck in that house. It's golden handcuffs. It's a great position because it's a really good deal. And what that means is, even if I wanted to downsize, unless I had so much profit in my house from the value going up where I can pay cash, even if I have a smaller mortgage, between the higher interest rate, the higher taxes, and all the other costs that have gone up, I could downsize and end up with a much higher payment for not as nice a home. So they're golden handcuffs where people are stuck. Even if I had a house that was too small, the same thing. I would be stuck in that house in a position where I'm just not going to move unless I had some huge increase in my income for whatever reason. And then the interesting thing about that is, even if that happens, simply because I'm so math oriented and so fine, you know, the way that my brain works, I don't even think I would sell the home that I had if I just decided whatever. I'm now making a lot more money. I'm going to upgrade and get what I want. I would probably still keep the house and rent it out, which is why I don't think we're seeing big inventory increases. The people who got in at lower interest rates aren't really looking to move. You add to that the new home builders learned their lesson back in the 2008 financial crisis. When I first moved out to Vegas back in 2005, I watched the new builders just putting up as many houses as they could, selling them to buyers who were walking onto the lot. Now, since they got stung so bad, they don't start building the homes until you've already signed a contract and put what's called an earnest money payment down. It may not be that much in the beginning, but they do want some skin in the game. And then the minute you add upgrades, they require you to put that money down as well. So many of the homes, even valued at, say, $450,000, by the time they get a few months, if not just 1 month into the contract, somebody's probably put down over $20,000. Now, that's just a made-up number. But that means if it falls out, the company keeps that money and then relets the home with having that $20,000 to cover whatever their losses are or costs at that point, and sell it at the same price. And while prices have been going higher, they've actually been able to sell it for higher prices. Now, home prices are probably a little overvalued, as well as the interest rates, but similar to stocks, things can stay that way for many, many years and can even continue. Eventually, it will make sense. And what I think will make sense is it'll have been that way for long enough that people will get used to it. I don't see any big correction. What I see is time taking long enough and inflation continuing through that eventually the prices aren't so unrealistic, that the rest of the world and the valuations have caught up to what the prices are today. And similar with the equities market, when I play out the different scenarios of what I see as being a possibility, most of them still end up making me bullish to the stock market. Now, I see two different scenarios where it just keeps chugging along, and the other where it actually melts up and goes up even quicker. And in that case, I would see it as a trade, and it's more something similar to what we saw in the late 1990s. It's possible for the next 2 or 3 years we see stocks really start to take off and go higher so quickly that eventually they'll top out and correct. But outside of that, I think we'll still hear rhetoric of why it's scary and why the markets are going to crash, and they'll keep on going up year in and year out until that changes and everybody piles in, which at least currently seems like a long way away. Even here in Europe, everywhere that we've been going is super crowded. It's gone up a lot in price. I see that they must have had some massive inflation as well. But people are out and about. They're at the museums. They're at the restaurants. You go in and there are plenty of them. You can't even get a table. They're so crowded. My understanding in these super popular areas, I think one of them is called Chinkper, which I told my wife I don't even think I want to go, because I've heard you can't even sit down at a restaurant. You can't even walk in the streets. It's so crowded. At least here in Milan, as crowded as it is, you can still walk around. You can still find a place that has a table and have some dinner, and you can still enjoy the day a bit. It's very crowded, but it's not so crowded that you can't even walk. I mean, we went to the shopping district and there were lines at to pay. There were lines for my wife to try things on. It was just super busy. Now, next we're off to the south. Hopefully it's nice there and maybe a little bit less crowded because not so many people go there, I think. But I guess we'll see. But again, that's why I'm super bullish of the economy. Is as much as the media, people keep saying it's overpriced, and it's overdone, and there has to be a correction. I see a bunch of people out and about spending money, working jobs. Somehow they're able to afford it. And I think that continues for a long time. Anyway, if you haven't already, do me a favor, hit that subscribe button, smash the like button, make some comments. Again, I apologize for missing for a few days. My back, I don't know if I slipped a disc or did something, but it was in so much pain. If I sit for more than a few minutes, I have trouble standing up. I ended up laid up in the bed. And the reason I have time to do the video today is I couldn't join my wife and son to go see the tour that we did today, because I'm pretty much standing to do the video. I'm going to do a little bit of walking, but I don't even want to sit. I'm probably going to go lay down. So anyway, sorry about my whining here. Again, thumbs up, like, subscribe, and let me know what you guys think.